Good morning. It is Friday, March 13th, 2026. This is your Deep Dive Daily Briefing. I am your anchor, Cora, providing a comprehensive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast on the world stage, where the strategic landscape of the Middle East has entered its most volatile phase in decades. The conflict involving the United States, Israel, and Iran is now on its 13th day, marked by a significant shift in the Iranian leadership following the reported death of Supreme Leader Ayatollah Ali Khamenei. His son and successor Mojtaba Khamenei issued a stark ultimatum late yesterday, demanding the closure of all United States military bases in the region or face sustained attacks. This follows a joint missile operation by the Islamic Revolutionary Guard Corps and Hezbollah that sent millions of Israeli citizens into bomb shelters. While President Trump recently suggested the military phase of the conflict might be near its end, the situation on the ground remains grave, with over 630 casualties reported in Lebanon and a humanitarian crisis deepening as 800,000 people remain displaced across the Levant.
Transitioning from the front lines to the broader global economy, the narrative is being driven by a historic intervention to prevent a total energy collapse. Following the de facto closure of the Strait of Hormuz, which has halted nearly 20 million barrels of daily oil and gas trade, the International Energy Agency has finalized a record release of 400 million barrels of crude oil from emergency reserves. The United States is contributing 172 million barrels to this effort, which has successfully pulled oil prices back toward the $100 per barrel mark after they briefly spiked to $120. Despite this relief, the International Monetary Fund has maintained its global growth projection for 2026 at a cautious 3.3%, warning that the system is operating with significantly narrower margins of safety. In India, Prime Minister Modi has officially unveiled a national energy strategy to combat black marketeering and fuel shortages, as cooking gas inflation begins to weigh on the world's most populous nation.
In the realm of finance, all eyes are on Wall Street as it processes the single most anticipated corporate milestone of the year. Following the close of markets in New York, Nvidia released its fourth quarter and full-year results, reporting a staggering record revenue of $68.1 billion for the quarter, up 73% from a year ago. This monumental performance was driven by an insatiable global demand for the Blackwell data center architecture, pushing Nvidia's full-year revenue to a historic $215.9 billion. However, the broader equity markets have responded with extreme caution, with Dow futures falling over 600 points as investors weigh these corporate triumphs against the rising tail risk of the Middle East war. Financial analysts are particularly focused on the bond market, where bond yields have hit their highest levels since October 2023, reflecting a deep anxiety that sustained energy shocks will force central banks to keep interest rates higher for much longer than previously anticipated.
Turning our attention to the technology sector, the focus has shifted toward the massive build-out of artificial intelligence infrastructure amidst geopolitical constraints. During the earnings call yesterday, NVIDIA CEO Jensen Huang declared that the agentic AI inflection point has officially arrived, as enterprises race to build the factories of the AI industrial revolution. Simultaneously, a significant shift in the tech workforce is occurring, as prominent European founders like Peter Steinberger of OpenClaw have officially announced they are moving operations to the United States, citing regulatory roadblocks in the European Union. This migration of talent and capital is occurring as the global semiconductor market approaches a $975 billion valuation for 2026. However, the industry is navigating a difficult path, with major firms like BMW and Honda being forced to rethink their electric vehicle and hardware strategies as the war in the Middle East upends the global procurement of petrochemical inputs and critical minerals.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce, which are currently facing a period of intense structural rewiring. Shipping traffic through the Strait of Hormuz has come to a near-total halt following targeted attacks on several commercial vessels, including a Thai-flagged tanker and a Japanese container ship. In response, major carriers like Maersk have officially implemented emergency freight increases of up to $1,800 per container for routes to and from the Persian Gulf. The impact reached a new peak late yesterday as drone attacks in Oman damaged fuel tanks at the port of Salalah, a critical transshipment hub. With nearly 15% of global oil and gas production currently shut in due to the conflict, logistics providers are warning of a domino effect that will soon raise the cost of groceries and household products globally.
The industry is responding by treating supply chain reliability as a core enterprise risk, rapidly adopting AI-driven inventory positioning to bypass these volatile maritime choke points. That concludes our global briefing for today. Thank you for joining us.